This budget speech was illuminated by BrightRock, the first ever needs-matched life insurance that changes as your life changes.
I'm Nana van Tilburg for Biznews. Finance Minister Enoch Godogwana presented his medium-term budget in Parliament today, and he indicated that disappointing tax revenues and rising costs to the service debt has hit government finances. And with me in the studio to discuss it is Thea Fourie from S&P Global Market Intelligence. She's from Johannesburg, and she is actually in the same building as the Constitutional Court, if I remember correctly. Thea, thank you so much, and welcome to Biznews.
Thank you very much for inviting me, Linda.
So, can you give us what's the difference between S&P Global, the ratings agency, and S&P Global Market Intelligence, where you are?
So, Linda, that's definitely two different businesses within S&P Global, a company. So, for market intelligence, we provide some data and insight to our ratings analysts, which totally independently decide on what should happen to the ratings within sub-Saharan Africa. So very, very much more on a consulting basis, but like I said, totally independent from us and making their own decisions independently.
Well, wearing that hat, what is your reaction to the policy statement today?
Linda, I think there's quite a lot of surprises, some more than others. I think the general consensus has been that there's going to be some form of revenue underperformance between 50 and 60 billion rand, and actually that is what we've seen today. Just get the numbers right. I think there was a 53 billion or 56.8 billion underperformance on the revenue side. But where the surprise came in, I think, was on the expenditure side. Which ultimately expenditure is going to be lower than what markets were expecting, and therefore the overall budget deficit at 4.9% of GDP. Previously, at February, we had it around 3.9% of GDP. Is actually a surprise. I think market watchers were more looking at a budget deficit of 6 to 7% of GDP. So this restriction in spending anticipated until February next year is very much a surprise, I think, and the one that we're very encouraged about.
Well, Mr Godongwana at the media conference called himself Mr Austerity. Is that? Do you think this reflects it?
Well, definitely on the spending side, but I do think one should focus a little bit of where the austerity is happening and if it's happening at the right place, right? So one reason why it would be difficult to typify yourself is the fact that we did see an increase in public sector wages above what was initially penciled into the budget. And then you have to ask yourself, given the spending cutback, which is the components that again will probably be less likely to reach its initial budget estimates. And again, you're looking at fixed investment and some of those essential services that needs to cut back to make provision for say, for instance, the wage will overrun. So I think it's important to think about where that austerity is happening, because it's definitely not a good thing if interest payments and wages crowds out investment.
Well, do you have any idea how investors might feel about this? Is the markets an indication?
I think the markets, before the budget release, the South African rand actually appreciated quite significantly against the US dollar. And after the release of the budget, I think it maintained its values. And I think the yields, our bond yields also, didn't move so much. So I think overall the investor community feels quite happy with the budget. They would be concerned about the continuous uptick in the public sector debt to GDP ratio. I think that to them would be a concern. And we keep on pushing out the time frame for reaching a peak in the public sector debt levels. So it's now, I think, only by 25, 26 when we reach that peak of public sector debt. So I think that's kind of offsetting some of the positive sentiment on the relatively smaller increase in the budget deficit as a percentage of GDP is the fact that your debt levels continue to accelerate.
So do you think this is the kind of budget you expected in an election year?
I do. I think the public sector wage bill, the social relief grant, all reflects that. Also, the fact that the finance minister has made it clear that we'll see some tax increases next year, but was not very clear on what those are going to entail. I think, still have to figure out how is he going to, get that extra 15 billion rand. Where is it going to come from? So I think he was very guarded in providing too much information. So I do think it's also brave to cut back spending in a pre-election year. But again, what is the spending components you're contracting? And that is, to me, I think the important thing to consider.
Well, he says the structure and size of the state needs to be reconfigured. Do you think that will happen? Job cuts?
That is definitely not in the near term before the elections. Like you say, this is the election year, and I don't think that's something that's going to happen in the next 12 months. Definitely not. This is a problem not just for South Africa, but I think in sub-Saharan Africa generally, it is very difficult to implement any such policies. So it's going to be a difficult one, but definitely not in the next 12 months. No.
Were you surprised that the grant was kept?
No, not really. And I think there's even over the medium term some provision made in the medium term projections, unallocated funds, which will allow for the continuation of the social relief grant. So I think there's already some space available for that. And I think the longer we have it, the more difficult it becomes to take it away.
Well, some analysts warned that South Africa is going closer to a fiscal cliff, that its debt is so high. Do you agree with that has not been stopped and there's still a slide towards a fiscal cliff?
It is problematic that the fiscal debt continues to rise, that the peak is continued to be pushed out. It seems very difficult for the South African government to achieve their objectives in this regard. And I think what is also problematic is what's going to happen with Transnet, right? Transnet has also been very verbal in saying that they want some support from the government, cash injections, some debt relief similar to what was provided to Eskom. And I think those things are going to make it very problematic. And if you start penciling this in, the picture starts to become very problematic and concerning, right? And I think also with what we've seen with Eskom's releases the past week of, the overspent in getting the emergency electricity program running, what needed to be spent, what they were budgeting for, what actually was spent. It's very easy to keep on missing your public debt targets. And I think that is the concern, especially in a very low growth environment.
Well, if what you guys do is political risk. So what kind of political risks are there in the period from now till the election that investors need to know about?
Well, I think before any election in South Africa, there's these pressure points that always flare up again, right? So there's always this debate about the nationalization of the Reserve Bank, about land issues. All of these pressure points always emerge ahead of elections, and I cannot see that this rhetoric will be any less aggressive this time around, given the fact that the ANC is worried about having a majority vote, majority in Parliament, and have the majority vote. So I do think those topics will re-emerge once again. It's hard to say which will be added to the list. But it's normally quite volatile and difficult to steer through these uncertainties.
You mentioned Transnet, and he said he's not going to bail them out now. Do you think that's realistic? When the economy needs Transnet, do you think he might change his mind by the budget in February?
I think he was very clear that certain conditions needs to be met, right? And I think if they can get to some form of agreement what those conditions are, because I think one should remember with Eskom as well, all of this help that's going towards Eskom is very much linked to some conditions. So I do think maybe if that's an option for the finance minister, it could potentially unlock some support. But it's problematic, right? And it's a huge constraint on growth. But at the same time, it's going to be very bad news for our debt trajectory if this happens.
So do you think the minister has his priorities right, or any of what he said, is that all achievable, the growth rate that he talked about?
I think the growth rate is very realistic in the budget. But again, I think how you put together your spending components is very essential to ensure long-term growth potential as well, right? And if you keep on spending your money on recurrent expenditures like public sector wages, social grants, and you don't enhance the production capacity through infrastructural development in the economy, it's not sustainable, right? And I think you need the investment. You need to generate savings to grow the economy. And to that sense, I don't think that balance is yet right.
Well, we mentioned that job cuts and stuff is going to be difficult. So where do you think this cuts in state expenditure will come from?
Well, it'll have to come through the big ticket, big ticket components, and unfortunately, the wage bill is one of the things that is probably most front and center. But then you also need to bring down your SOE reliance on the fiscal institution. So you really have to take a very long and hard look on how you're going to address your SOEs and what it means for the government finances, and to what extent you need to rationalize, close, privatize those SOEs to let them become much more efficient, right? So I think, SAA is a classical example of, for instance, how difficult it's going to be to introduce job cuts or close down state-owned entities or rationalize them. But I do think those two components is first of mind to really have a relook at our government finances.
And also, he talked earlier about putting the president as well, putting departments together, having less ministries, but they haven't done anything about that. Do you expect anything like that happening?
It's still stated in the medium-term policy statement. So it's not off the table. But again, before the elections, I don't think anything like this is going to be considered.
So it seems like your assessment is it doesn't look that bad. But the question is, are what he set out, are these objectives achievable?
Yes, I think like looking at the initial, the budget release today, it really didn't look that bad. Like I said, we expected revenue underperformance. The deficit is not as high as percentage of GDP as people were expecting. But I do think the concern lies in the fact that the public sector debt to GDP ratio continues to move upwards, and reaching some point or peak in the debt ratio, continues to be shifted out. And it seems like government is really struggling to get to those targets. And in the medium term, there is definitely risks on the horizon that can once again trigger public sector debt to end at a much higher level over the medium term. Just thinking about Transnet, right? If you have to add Transnet's requirements or demands on the financial side to the budget, again, we're going to push out our public debt to GDP ratio. If we can't adhere to wage agreements over the medium term, again, we're going to push out our debt to GDP ratio, and every time at a much higher much higher ratio to GDP. So those things, I think, is a concern. Is really achieving your objectives and it seems like the South African government are struggling to get to do that.
Thea Fourie, S&P Global from S&P Global Market Intelligence. Thank you so much.
Thank you.
This budget speech was illuminated by BrightRock, the first ever needs-matched life insurance that changes as your life changes.